Hey, it's Mason from Mason's Forex Trading and Investments. Please take note of the risk disclaimer. Everything provided in the video is strictly for educational purposes. Please also hit the subscribe button, like and share the video with your friends and your family. Content to be covered today: Introduction, great tips or tricks for employees, long-term traders and business owners to get highly independent and confident in their trading skills. Creating a basic plan for long-term trading to further support your journey. Basic candlesticks and combinations which can be used for signals or entries. Typical uptrend, downtrend and range-in market examples with advanced strategies for entry, exit and take profit. And finally, a quick-fire summary. Introduction. Are you constantly busy at work or your business and don't have time to prioritize your side hustle, which is Forex trading? Are you constantly busy with other priorities like taking care of your family, exercise, or any other responsibilities? Are you currently not happy with your job? Are you in need of more income and not sure how to get started in Forex trading? Are you someone who has lost hope in trading because they sold you dreams? Are you currently not happy with your current business? Do you often wonder how can an employee or business owner or long-term trader drastically increase his or her trading skills without any mentor or signals? Then this video is just for you. Tips or tricks for employees or long-term traders to get highly independent and confident in their trading skills. The fact that you work or run a business means that you don't have time to develop your skills as compared to someone who's trading full-time or at home. What if I told you that you can really get trading confidence or skill without any mentor, robots, or forever depending on signals? One of the most underutilized or undermarketed tool is the free Forex trading simulator. This tool is key to your trading confidence and can save you massive amounts of money, which occur without properly testing a strategy. Let me explain further. Imagine if you created a product and needed to test if the product worked properly in different conditions. Instead of paying customers or giving free product, you could have a tool to test the product at any time of the day or night. Likewise, the free trading simulator offers the exact same setup. Before you ever go to a live Forex trading account, you would have to test the strategy in different market conditions and with different financial instruments. Also remember, once you understand market basics, it becomes very easy to do testing or simulating. You are definitely allowed to be authentic and innovative once you do massive amounts of testing. There's no need to follow the herds, and oh yes, you can create anything you desire based on what you want. With respect to the simulator, it's a very easy tool to use once you get the hang of it. If you are scared to use a local or international Forex broker due to any concerns, you can test or simulate on any proper demo account without any risk. You could use your local bank if they offer a Forex trading platform to execute trades. Never quit your job, business, or any other commitments to trade Forex. In fact, any other income can really assist you with funding your live account and taking care of your daily expenses. Please see my previous video or previous YouTube video to get more information on the simulator, which is very important. I will leave the link in the description area. Here is a link to download the free tool, or type FX Blue Simulator on Google, and it also comes with a PDF document to guide you. Creating a basic plan for long-term trading. Long-term trading would be using the 4-hour, daily, weekly, and monthly charts. I would recommend using 4-hour charts and or daily charts for testing any strategy. The reason for this is that one would have more trading opportunities as compared to weekly or monthly charts. Please take note that for a 4-hour time frame on MetaTrader 4, each candlestick takes 4 hours to form. This means that if you are employed, then you would see 2 candle formations for a day. If you entered on a 4-hour chart, you would only need to view your charts twice a day at most. As for the daily charts, it would mean entering at the end of each day. This means only seeing your charts once a day. The powerful advantage of long-term trading is that it massively reduces anxiety. If you use the 1-hour charts, for example, you would need to be looking at your charts very regularly to get potential entries. Please also remember when it comes to using the free Forex trading simulator that it can be used at any time of the day, night, or weekends, provided you have an internet connection. This means that if you have time during weekends, or rather if you make time for testing, then you can still build your trading confidence. The Forex trading skill comes with massive initiative, effort, and time. It requires the same effort as your job or business areas. There is no quick money. The simulator tool has a speed function. This allows the candlesticks to be on either a fast or slow pace. This means you can go through Forex historical data at a fast rate. Testing and knowing exactly how your strategy performs is extremely critical to your success. Just as someone can't do your job or run your business entirely, it is the same with a strategy. It's unique and it's only applicable to you. One must create consistent habits in order to develop their Forex trading skills. You have to be testing or simulating on a daily basis with effort and energy. It's your responsibility if you truly want to improve. You must treat trading like any investment or new business opportunity. Other suggestions for the trading simulator and your Forex demo account setup. You can actually start testing major currencies, example Euro USD, Great Britain Pound USD, USD CAD, etc. for a start. Many Forex brokers have a demo sent account. This is a great account as it allows beginners or intermediate traders to trade with much less risk than other accounts. I highly recommend starting with this account. Use the smallest lot size as possible, which should be 0.01. Keep your risk as small as possible. For each trade, try and keep the risk around 2 to 3%. This decision is also entirely up to you. Set your demo account and the simulator to only money that you can afford to lose. I urge you to not use a demo account or set the simulator to 1 million USD or any high amounts, as this will lead you to the idea that you could get rich fast and you think that you know what you're doing. If you can afford to lose, for example, 500 USD, then please use that. It's again entirely at your own decision to make. Learning the process is the most important, and making money comes in time. Note, research says that our brains only remember about 7% of video content. Please make notes, watch the video as much as possible, and take consistent action. Basic candlesticks, which is a visual representation of price. On your left hand side, we have a bullish or buy candlestick, and on your right hand side, we have a bearish or sell candlestick. The difference between the two candles are, on the bullish candle, we open at the bottom and we close at the top. For the bearish candle, we actually open at the top and we close at the bottom. So this is how the two candles differ. The candlestick combinations above show buyers may be stepping in or price may go higher. These above form signals or confirmation at areas of value. The candlestick combinations above show sellers may be stepping in or price may go lower. These above form signals or confirmation at areas of value. Typical uptrend, ideal conditions, we look for buy opportunities. You can see price pushes into the R level or resistance level and it moves away. That move is called your retracement or pullback move. Eventually, price pushes higher. At S, which is your support level, you can see that in time, resistance gets converted into support and price pushes higher. So this is how an uptrend is composed. It's composed of higher highs and higher lows. You can also see our areas of value. Let us zoom in. With this candlestick confirmation, it now tells us price may be going higher. So we now have an entry signal. Our stop loss can be 1 ATR. Furthermore, let's look at another signal. So we now have this candle confirmation, which tells us the price may be going higher. We now have an entry. And our stop loss will also be 1 ATR from the low of the middle candle. Your take profit, TP, can be 1 R. For example, if you risk $1, your reward can be $1 or 1 R. Your ATR or average true range indicator, this is a free indicator on MetaTrader 4 that can be used as a tool for your stop losses. Please see my other YouTube video on how to use this tool or in the description link. We are now on Euro USD and this is the 4-hour charts. Looking at your bottom left hand side, you can see we start on the 29th of May 2017 and moving to your extreme right hand side, you'll see we end off on 12th of September. Once again, price pushes up, it retraces, price pushes up, it retraces, price pushes up, it retraces. So you can see this is a common pattern which occurs in the market. We have now zoomed in. If you look at the level of 1.12939, this is our area of value. You can see that price pushes into the resistance level and moves away. So we move into this level and price reverses. This is known as our resistance level. In the future, price actually pushes higher. It pulls back into this area of value and moves higher. This is now called support. We have resistance converted into support in the future. And if you look at price again, price pulls back into this area and moves higher. The price is supported again. If you look at our red candle here, this candle has a wick. This wick gives us an indication that price is rejected from the level or the bulls are in the market. We could have actually entered this trade at the close of the candle of the blue candle, which is also called an engulfing candle. We could have had an entry, E for entry, and from the wick we could have had a stop loss of 1 ATR. So the setup is more for an advanced trader, in my opinion. Moving on further, we have this blue candle. In our case, this is not an engulfing candle. I would have ideally liked this candle to be larger than the red candle, or larger than this candle X. If the blue candle was larger than the red candle, I would have used the blue candle as an entry signal, the close of the candle. So it would have been E for entry, and the stop loss would have been 1 ATR from the low of candle X, and SL for stop loss. So moving on further, price pushes into the level and retraces. So we now have a support level, or rather a resistance level. So price pushes into this level. You can see it retraces out of a resistance. We break through and we come back into this level and move away. So this is now called support. This would have been an entry for me. E for entry, and the stop loss would be 1 ATR from the low of the candle, SL for stop loss. Moving on further, we can see that price again pushes into this level and moves away. Again, it's called resistance. Moves back into this level and moves away a little, and eventually this blue candle breaks out. We could have used that as an entry, E for entry, and from the low of the candle we have placed a stop loss. Now this breakout candle, let's call it BO. The suggestion for this type of strategy, I would recommend you test it, because if you go to this level, where the red line is, and you see that this candle here forms a BO, or breakout candle, because it closes higher than this area here. Now if you placed a stop loss of 1 ATR from the low, let's just say our stop loss is there, SL, and this close of this candle is E for entry. Price pushes into this resistance level and moves all the way back. So we could have actually been stopped out here. So we need to test and see the percentage of wins to losses for a breakout strategy. So let us move on further. Typical downtrend, ideal conditions, look for sell opportunities. You can see we push into S, which is your support level, and price retraces. In the future, support gets converted into resistance. As you can see, a downtrend is actually composed of lower highs and lower lows. And we've identified our areas of value. Let's zoom in. If we get this candlestick formation, it gives us a confirmation that price may go lower. This now forms our entry signal, and we're going to have a stop loss 1 ATR from the high of the middle candle. And looking for another entry signal at the R level or resistance level. You can now see, should we get this type of candle formation, gives us a clue the price may be going lower. Again, we have an entry signal, and we're going to use a 1 ATR stop loss from the high of the middle candle. Your take profit TP can be 1R. For example, if you risk $1, your reward can be $1, 1R. So very similar to your uptrend. We are now on Euro USD 4-hour chart. You can see price pushes lower and it retraces. Again, it pushes lower and it retraces. And you can see there's a repetitive pattern. Moving on further, we've identified an area of value. So how is this actually an area of value? Looking from the left, we'll see price pushes into this level and it moves away, pushes back into this level, moves away, and it once again pushes into this level and moves away. We can now say price is supported. As for support, eventually price moves lower and retraces or pulls back into this support level. We can now say support is converted into resistance and price moves lower from this level. If you look at this area here, you notice we now have an area of value again. So price pushes into this level and moves away. We can call it a support level. And support becomes resistance in the future. So we have resistance here, resistance here. We also have resistance here, and we have resistance here. So you can see price pushes lower, retraces into this area. It retraces again. It retraces again, pushes lower and retraces again. So from our area of value, we can actually get multiple entries. Let us see if we can look for entry signals. If you come to this area here, you'll see we have a wick. This wick tells us is selling pressure. Now if you look at this candle, here, with this candle, and also the blue candle on the other side, we have something similar, this image. So this is actually an entry signal for us. My stop loss will be 1 ATR from the high of this candle, and my entry will be at the close of this red candle, E for entry. So that's one signal or one entry point, and our take profit will probably get our take profit here. So moving on further, let us look at this area, or rather from this areas of value, can we find a signal? This wick again tells us selling pressure. In our case, I don't see an exact pattern or candle configuration or confirmation as our previous slides, so I'm going to skip this area. If you come to this level, this would be an entry for me. We have a wick again. Wick tells us selling pressure, and we have a nice large red candle which tells us we could be going lower. So my stop loss will be 1 ATR from the high, and my entry will be based on this red candle here. My entry again based on the red candle there. Moving on further, in this area, I don't see a exact pattern for candlestick formation. But if you look at this blue candle with this red candle, we actually can use it as an entry. Again, stop loss 180R, and this red candle here would be E for entry. And you can see we may have, or we most probably would have received a take profit or made 1R. And finally, again, the wick gives us or tells us selling pressure. I would have used this red candle as an entry, that red candle. Again, stop loss, as you know, 180R from the high of this wick. The entry, again, for entry. And I most probably would have made my 1R. Typical ranging market, ideal conditions. Look for sell opportunities at resistance and buying opportunities at support. So you can see price pushes into the resistance level and moves away back to the support level. S for support, R for resistance. And then we move from resistance to support and from support to resistance. We can see that market is ranging. We've also identified our areas of values. Let us zoom in. If we get this type of candlestick confirmation, it tells us price may be going lower. We have E for entry. And again, our stop loss is 180R. Our take profit level can be at the support level. Let us look at an entry at the support level. This type of candlestick confirmation, or rather serves as a confirmation. So we're going to look at a buy entry, and we're going to have a stop loss of 180R. The take profit can be at the resistance level. We are now on USD CHF, and it's the daily chart. You'll see price pushes lower, it retraces, it pushes lower, and eventually it moves in a sideways movement or ranges. As you can see, we have the 0.99598. This forms the resistance level. And if you look at the 0.95361, that forms the support level. This area is our areas of values on the resistance and support level. R for resistance and S for support. So let's see if we can find some entry signals. At our resistance level, you can see we have a combination of candles. But from our previous slide, I don't see a exact pattern or candle formation that suits us. But if you look at this red candle here, this candle closes lower than all other previous candles. So this could have actually been used as a entry signal. And we could have placed a stop loss 180R from the high of the candle. And if you look at price, moves lower to the support level. So we could have actually made some profit here. Now if you look at this level here, I don't see any specific candle formation or anything from the slide that makes me happy. So I'm going to ignore that one. But in this case, we have a type of doji candle here. So one with the long wick, and then we have a engulfing bar. So this engulfing bar now forms E for entry, and the wick will be 180 our stop loss from the low of this wick. And you can see price pushes higher. Let us look at this support level here. You can see we have this type of wick or rejection at this level, and then price moves much higher. So this could have actually been an entry, E for entry at the close of this blue candle. This blue candle is now X, and our stop loss this is going to be candle X for now, and our stop loss will be 180R from the low of this candle here. Call the candle Y. Moving on to our resistance level, you can see we have this candle, which is approximately the size of this blue candle here. In our case, we could have actually taken this candle based on an aggressive entry. So at the close of this candle, we would have had an E for entry and a stop loss of 180R. You can see price pushes into this support level. Back at this support level, I would have actually preferred if this blue candle was larger than the other red candle or even equivalent in size. I'm going to ignore that. I'm going to ignore that entry. So you can see the multiple entry signals and styles of entering. So let us move on further. So now we come to the summary. The Forex market either trends or ranges at any point in time. Each strategy needs to be tested for each financial instrument or currency pair. One strategy does not fit all. Forex trading confidence is built over a lot of time and effort. Forex trading is not a get-rich scheme. The trading simulator will assist with super boosting your trading skills. Remember, the trading simulator takes you through Forex data very fast. You can test a year's data, for example your 4-hour charts, quickly. I highly recommend never ever buying strategy PDFs, courses, signals, etc. Give yourself time, as greatness takes time. We are all worthy and deserve to be highly successful in Forex trading. All the best to you. So we've come to the end of the video. Until the next video, goodbye.